Touch base very quickly with Mr. Partha DeSarkar, who's the CEO of Hinduja Global Solutions, to talk about the business outlook thereof. Mr. Sarkar, good to have you on the show. Thanks very much for taking out the time to speak with us, sir. First up, really wanted to get your sense on how you're looking at the sector's performance going forward into the future. It's a different industry from the IT sector. It's more OPEX and more operationally led, so to speak. Give us your own sense about the dynamics at play very quickly and how you see the key triggers driving the business forward.
I continue to remain quite optimistic about the prospects of the BPM industry because we really scratched the surface. If you look at the statistics, about 160 billion is the total market size, annually growing by about 5%. And that's only 20% of the complete work that is available because 80% is insourced. So growth will come from more and more outsourcing and offshoring happening of people who hold their work in their captives. And that will come to suppliers of high quality. So I continue to remain very optimistic about the growth prospects of this industry. And there are some interesting things that are playing out. I think there is a little bit of a rise of protectionism that we are seeing. And that's probably going to bode well for us who've got a substantial onshore presence. So our onshore-offshore mix is very strategically designed to be able to utilize opportunities that happen onshore as well. So to repeat, I think I'm very happy with where we are at this point of time. We've delivered about 20% CAGR in the last 5 years, and I remain optimistic that we will be able to match those numbers going forward as well.
Mr. Sarkar, morning. What about the risks from H-1B visa? I understand that would be a bit negligible for your company, but what are your clients indicating? What is your strategy to address changes?
So H-1B, as I just have mentioned before, it's not relevant to us at all. We don't have that business model. Our clients, for us, it's been business as usual. So they've fixed up their operating plans for the coming for this year. And as we build our budgets for the coming fiscal, as of now, we see, as I said, our regular growth, which in constant currency term will be anywhere between 10 to 12% probably. So it's business as usual. We're very confident of that.
Yeah, and what about the healthcare segment? Because that's been your bastion and a fast-growing vertical. Your share of insurance has also been disproportionately high in North America, which reflects your strength. Will they be the drivers for incremental growth?
Yeah, health insurance is our sweet spot. We've been in the health insurance business for the last 17 years. In fact, our first client was a health insurance client, and it continues to be a growing client with us. Strategically, we also find that there are a lot of opportunities of moving upstream in health insurance. So what we are doing is we're doing utilization reviews, we are doing nurse triage, we're doing fairly high-end work, we're doing coding. We seem to be able to penetrate higher and higher in the value chain of the health insurance industry. And the new development has been that our health insurance delivery was mostly offshore in India and Philippines. To that, we've been able to add nearshore. We've added Jamaica to the mix. We've added Colombia, so that's also nearshore. And also, we've built our presence onshore as well. So there is delivery happening from our El Paso center, which is near to the Mexico-US border. So overall, health insurance is going to be the prime mover of our growth going forward as well.
Right. Mr. Sarkar, we're completely running out of time, so between Awan and myself, we have just 2 more questions for you. If you could just give us some sense on the outlook in terms of inorganic opportunities, the cash that you have on your books, and are you going to be looking at strategic acquisitions to grow forward from here?
We've used the cash in our books to do strategic acquisitions, as you've correctly said. We continue to look at digital opportunities. We are looking at healthcare new capabilities. So the cash in our book is meant to, one, drive organic growth and to be able to do strategic capability additions that we don't have in our suite of services. So it's a comfortable position to be in. We don't have financing contingency in case we have an acquisition target that we need to move in quickly. So that's what we want to deploy our cash for. So it's a comfortable position that we have.
Right. And analysts are penciling in an EBITDA margin improvement of 120 to 130 basis points as you recalibrate your strategies. Is this in line with what you're working with?
You know, we don't give guidance. I know analysts have made certain projections, but I'll have to stay away from giving guidance because as a company, we don't give guidance. We've improved our margins from last year to this year. Depending upon where the rupee goes, the rupee is strengthening a bit. So we do see good tailwinds for improving our margins, but I would stay away from commenting whether it will be in line with what the analysts are saying. I would only say that there is enough tailwinds available in the way we are delivering today that will result in margin expansion going forward. What that number is going to be, I'll probably not comment on that.
But the tailwinds have definitely helped your stock again about 54% over a period of time, especially from the start of the year till now. But thanks very much, Mr. Sarkar, for joining us and giving us a brief update about how business is shaping up for you. Hindustan Global Solutions. At that, we come to the end of this edition of Hot Start.